Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in.
Happy Tuesday, everybody. I'm a little under the weather at the moment, so my voice may sound a little funny at places. I hope this is not too distracting. There is a lot to go through, so let's jump in. First up, the final travel numbers are in, and frankly, they are quite disappointing. The hope had been, going into the Lunar New Year period, that Chinese travelers would show a strong boost in spending, signaling recovering consumption for this year. While the spending data was not bad, it certainly didn't reach expectations. Quote, travel and consumption data for the week-long holiday were up from 2019, the last spring festival not affected by COVID, but the increases from 5 years ago were not that impressive, and per capita spending looks to have dropped. The stock market opened strong, weakened, then state buyers appear to have stepped in to push key indexes up. That was not the hoped first day of trading in the year of the dragon. End quote. Let's unpack some of these points. Chinese financial media outlet Caixin reports today that both domestic travel and spending surpassed 2019 levels during the 8-day holiday. Travelers made approximately 470 million trips from February 10th through February 17th, up 19% from the same period in 2019, and a 34.3% jump over last year. The outlet adds that total tourism spending reached approximately 630 billion yuan, $88 billion, up 7.7% from 2019 levels and 47.3% on last year. However, quote, a breakdown of the spending data showed that tourism revenue per head during the Lunar New Year holiday softened to 9.5%, below 2019 levels, according to Goldman Sachs analysts. That figure is also weaker compared with previous holidays, which were 3.5% below 2019 levels during the New Year holiday and 2.5% during the National Day holiday in October, suggesting consumers are still scaling back spending. End quote. We also learned that new property sales in 61 sample cities during the holiday declined around 26.8% year-on-year, while sales of pre-owned properties dropped 6.1% in the same period. As Bishop observed, U.S. outlet Bloomberg reports that several exchange-traded funds in China, tracking the nation's stocks, saw a surge in turnover on the first trading day after the Lunar New Year holiday, that is yesterday, Monday. Quote, a likely sign that state-backed funds continue to support the market. End quote. While we are on the market, trading today, Tuesday, the CSI 300 dropped at the opening of the day as investors assessed the People's Bank of China's decision to cut its 5-year loan prime rate, the peg for most mortgages, by 25 basis points to 3.95%. The 1- and 5-year loan prime rates, the peg for most household and corporate loans in China, remains unchanged at 3.45%. William Ma, Chief Investment Officer at Grow Investment Group, expressed in an interview today, quote, so for potential home buyers, actually the funding costs for buying houses and getting a mortgage is much, much lower. I think in terms of market reaction, though, we need a bit more time. End quote. Next up, a new development in China's trade tensions with the developed world. We've been following the story for some time, nations increasingly concerned with hugely subsidized Chinese industries undermining local producers and firms. Today, UK-based The Financial Times reports, citing US officials, that Washington has warned Beijing that the US and its allies will take action, quote, if China tries to ease its industrial overcapacity problem by dumping goods on international markets. End quote. One official reportedly expressed, quote, we are worried that Chinese industrial support policies and macro policies that are more focused on supply rather than thinking about where the demand will come from are both careening towards a situation where overcapacity in China is going to wind up hitting world markets. End quote. The US is most concerned about advanced manufacturing and particularly clean energy sectors such as electric vehicles, solar panels, and lithium-ion batteries. The same official added, quote, the rest of the world is going to respond, and they're not doing it in a new anti-China way. They're simply responding to Chinese policy. End quote. Meanwhile, across the Atlantic and on this topic, the European Union has opened an unprecedented investigation into a unit of China's state-owned train maker CRRC Co. Limited over alleged unfair subsidies over its bid for a €610 million, $657 million US, public procurement contract in Bulgaria to provide electric trains along with maintenance and staff training. CRRC is the world's largest rolling stock manufacturer, supplying products and services to more than 100 countries and regions. Chinese financial media outlet Yitai reports that the probe, which could block the company from the deal, the worst outcome, is the first in-depth investigation under the Foreign Subsidies Regulation that came into effect in July last year, designed to prevent foreign subsidies distorting the EU market. Quote, the CRRC unit won the contract for 20 electric trains with 15-year maintenance and staff training services. Its bid is around half that of Spain's Telgo. The Commission said a preliminary review made clear a full-scale investigation was needed because of sufficient indicators that the company has been granted a foreign subsidy that distorts the internal market. End quote. China's Ministry of Foreign Affairs expressed concern about the investigation over the weekend, and the China Chamber of Commerce to the EU said in a statement that the investigation, quote, sent a discouraging message to Chinese investors, end quote, adding that it was concerned about, quote, the increasing protectionist tendencies and abusive use of policy instruments, end quote, as well as over the, quote, growing politicalization of the EU's business environment, end quote. We remember back in October, the European Commission launched an anti-subsidy probe into whether Chinese EV makers are benefiting from state subsidies. Next up, in a concerning development, tensions with Taiwan are again escalating. But just quickly, if you're enjoying today's episode of China Update, as always, it's a huge help if you can hit the like button, and for those who are not subscribed, subscribing is a big help. It's 2 clicks of the mouse, but it's a huge help for me and the channel. And for those who want to help keep the channel financially sustainable, I rely on subscriber support primarily to keep the channel going. Patreon and Buy Me a Coffee links are in the description below. With your support, I can continue producing these videos 6 days a week. Okay. Let's continue. Last up for today, the situation over the Taiwan Strait has seen a serious status quo change. As we discussed yesterday, last week, 2 Chinese fishermen drowned after their vessel had been sailing around 1 nautical mile off the coast of an islet of Kinmen Island. These are restricted waters near military installations. Kinmen is controlled by Taiwan, but sits just a few miles from the mainland coast. Taiwan's Coast Guard chased the fishermen out of the waters, but the Chinese vessel capsized. 4 fishermen fell into the water, and only 2 of the 4 could be resuscitated by the Taiwan side. Beijing appears to have taken this opportunity to justify a change in the status quo around the waters. A spokesperson for the Taiwan Affairs Office of the State Council in Beijing said that the relevant authorities in Taiwan were acting with a disregard for human lives and a negative attitude, adding, quote, the incident has caused strong indignation among other sectors of society on the mainland, seriously harmed the feelings of compatriots on both sides of the Taiwan Strait, and severely sabotaged cross-strait relations, end quote. The PRC then said that it will send regular Coast Guard patrols into waters previously considered restricted. And sure enough, on Monday morning, 4 PRC Coast Guard vessels sailed near the restricted zone surrounding Kinmen Island. Most shockingly, 2 PRC Coast Guard vessels forcibly boarded a Taiwanese tour boat full of tourists. Some of the tourists on board later told Taiwanese media that they were worried about not being able to return to Taiwan. The Chinese Coast Guard called these routine patrols. Indeed, now officials and state media are saying that the waters near Xiamen and Kinmen, quote, are traditional fishing grounds shared by fishermen from both sides. There are no prohibited or restricted areas, end quote. Some analysts say these series of moves are part of Beijing's so-called grey zone operations. Ian Chong, a political scientist at the National University of Singapore, in a statement yesterday, observed, quote, "These moves are efforts to erode Taiwan's ability to administer places like the waters around the offshore islands and the west side of the median line of the Taiwan Strait. From the Second Taiwan Strait Crisis, 1958, on, Beijing never tried to challenge Taipei's control over Kinmen and Matsu, since leaders on both sides of the Taiwan Strait at the time thought these offshore islands acted as a connection between Taiwan and the Chinese mainland." End quote. This now appears to have changed. Thus, what we are seeing is an especially provocative move from Beijing, and a significant escalation in the area. The chances of an accident between militarized sides has once again increased. Okay, that is today's episode of China Update. Thank you so much, everybody, for watching. Have a good Tuesday, and I will see you all tomorrow.